You've all heard that the market sales have dropped by over 40%. We started off the month with the Bank of Canada increasing the interest rates by 50 basis points on June 1st. This is the third rate hike of the year, and they just increased it by another 100 basis points on July 13th.
Emotional damage.
The increased cost of borrowing is causing a lot of buyers to sit on the sidelines and have a wait and see approach to see how low the market will actually go and decide when to get in when it's at the bottom. In this market update, we'll discuss what the market is actually doing and to see if the wait and see approach is actually a good decision or whether there are opportunities in the market today. I'm Stephen Ho with the Mr. Sauga Real Estate team in Mississauga, Ontario. If you're new to this channel, subscribe for real estate market updates. Comment below, let me know what you think the market is going to do in the coming months and where you see the opportunities are in this market. Sellers have experienced a hot seller's market for the better part of the last decade. And buyers are turning around looking and waiting to see where this bottom is going to be. Yes, home prices were inflated earlier in the first quarter of 2022. We can all agree that the 30% growth in price year over year was going to be unsustainable. With the interest rates at next to nothing for the last couple of years because of COVID, amongst other reasons and demographics and housing needs, we can see why the housing prices have surged. But now when most buyers are taking a wait and see approach, this might actually be a good opportunity for you to get that house you wanted, or get into that neighborhood you wanted, or get into that school zone you wanted that you probably didn't think you had a chance to earlier this year or even last year. But this all depends on what your goals are. Average home prices have settled back down to kind of fourth quarter last year, but we're still over 5% higher than last June. We need to understand what the fundamentals of the market and how things affect value. So the three main components are interest rates, unemployment rates, and immigration. So currently interest rates have been going up and have gone up and are expected to continue to go up. Unemployment rates are back to record low levels. We have a shortage of labor, and immigration, we're experiencing record highs. So the question is, what should buyers and sellers do? Now for buyers, waiting in theory might be the smart thing to do, but knowing when or how to get into the market, how do you know when you should actually get into the market? And therefore, waiting without really knowing when or how might be the dumbest thing to do. So with borrowing costs increasing and interest rates are expected to rise some more, how will you know when to get into the market? The smart thing for you to do is to figure out what that cost versus price is and where that sweet spot is going to be for you. And then we can figure out when that opportunity is and when is a good time for you to get into the market. So if you look back into the prices earlier this year when it was crazy, the borrowing costs were still very low. So if you look at that monthly cost back in February for that house that was $250,000 more, the monthly payments are actually lower than current rates and current prices. So for example, if you look back in February, a house that was selling around $1.6 million at 3.2%, your monthly cost was actually $6,189 a month, assuming 20% down. So for that same house, today is selling for around 1.3 million, but interest rates are around 6.2%. Your monthly cost is now $67.78. So that's like $600 more per month, even though the price is $300,000 less. So the question is, would you rather pay the market or would you rather pay the bank? The market pays you back over time. The bank doesn't. So you want to try and project what that budget would look like when the interest rates increase again or again, and to see what that budget would look like for a house that you want in that neighborhood you want or that school zone you want. And when those prices settle down into your budget, that's the when you should get in on your opportunity. Because the last thing you want to do is have that opportunity pass you by and you didn't even know it because you were still waiting for the bottom. If you haven't already, follow us on Instagram at Mr_Sauga. We post up-to-date real estate information on a daily basis. Just because the real estate sales have come down by over 40% compared to last June doesn't mean that the prices have come down just as much. We were going 200 kilometers an hour and now we're going at 100 kilometers an hour. The market hasn't lost as much ground as the media would have you believe. Yes, the market is uncertain right now. It's slowed down a bit, but there are opportunities out there and we're here to help. As borrowing costs are increasing, the higher priced properties are slowing down more than the entry level. This is similar to what we saw in 2018 when they introduced that stress test, kind of a phantom interest rate increase. I think it's a similar market to that where it's a great time for you to upsize. Sell your entry level property at a fair price and you can get that bigger property in a neighborhood you want at a discount right now. Let us know if you have any questions. Subscribe for more real estate updates. Comment below. Let me know what you think is going on with the market and where the opportunities are. And we'll see you at the next one.